from the beginning. Okay, well, I'll be quicker this time. Just a review of the euro-dollar technicals and how it has been reacting to the tapering talk. We had the taper talk here in June, which gave the U.S. dollar strength, and now we have this FOMC minutes and Bernanke speaking, and that pushed the dollar down against most currencies. So we're here again ahead of the FOMC, consolidating before Wednesday's FOMC meeting. So let's see if it breaks above or below this range of 1.33 and roughly 1.3235. Okay, a break to the downside, I think, opens up these lows down here near 1.30 flat. Okay, so if there's a break, and after the FOMC event risk, we don't get a pop above the middle of this range, which I would say around 1.3270. If it stays below 1.3270, preferably below 1.3250, I would anticipate the ability of the market to push it back down towards 130. Okay, so event risk after tomorrow's FOMC meeting, if the market respects this topping attempt, then we should look forward to a target of 1.30 in the short term. Yeah, there are some end of the month flows, but I think, on top of that, there are a lot of event risks that will be even more significant. Even the ECB will be meeting on Thursday, and the BOE will be meeting on Thursday as well. So a lot of things going on. You can't depend on just one factor. You have to, for me, and for technicians, or technical analysts, technical traders, these type of event risks make short-term technical patterns less reliable, and we tend to want to see what kind of pattern develops after these event risks. But if you break out of the pattern, it could be significant, such as this mini sideways consolidation we had since last week. So the euro-dollar, let's see what happens with this range. And above this range, a break above, similarly, without a break back below 1.3270, to me, exposes the 1.3411 pivot here in the short term. Okay, so looking for a breakout of this consolidation with the FOMC event risk. Okay, so moving on, and we can always come back to this if you have any other questions, but I want to just cover some of the majors before getting to your questions. So the next here is the pound dollar, which was an interesting development last week with this expanded consolidation. So last week it looked like we had a double top. The market had a false break to the downside, still held, and then another break to the downside, a break to the upside. So I remember writing about this break to the upside and just sort of being cautious, warning that we should be cautious that it could still be in consolidation. And one of the clues I was looking for is if there is a pullback, whether it would break below this 1.5325 pivot. And for a short while, the market held there yesterday, but broke below it. So there's no more bullish bias as far as the structure goes. Price is breaking below the 200 moving average here. That's also taking away any bullish bias and introducing bearish bias, in that case. And the RSI, the ability to push above 70 and hold above 40 would hint bullish momentum developing. But in this case, you had that attempt to start some bullish momentum, but the RSI came back down below 40, so that bullish momentum is killed. So in review, this market is basically just, we had a one swing down and then one swing up, similar to the euro-dollar because the U.S. dollar here is the main mover because of the taper talk and anticipation of that taper talk. So, we came up. This was actually around 61% retracement. Let me just show you that Fibonacci retracement level here. So it went up to around 61.8% before we stalled. Okay, so classic 61.8% retracement. And it looks like we may have topped off. Okay? But again, we have event risks on Wednesday and Thursday, making this, I would recommend that if there are any trades based on these technical topping attempt, that it would be, half a position, third of a regular position due to the event risks coming up. That you can always add after the event risks, but taking a position before it suggests what's going to happen, and as honest as I can be, I can try to anticipate the edge, but there's no way I can tell the future. So, Bank of England. Okay, so Bank of England minutes showed that there were less suggestions to do more quantitative easing. So quantitative easing in the UK and in the Bank of England appears to be off the table, or additional quantitative easing it seems to be off the table at the moment, which should give the pound some strength. But apparently here you see the pound couldn't push further above 1.5433. So, if the Bank of England announces some kind of increased stimulus measures, that will take the pound down drastically at the moment, because I believe they priced in a little bit of they priced in not the end of stimulus, but sort of the end of additional stimulus. Okay, so we'll see what happens. But what I'm looking for is this consolidation here. I'm looking for the middle of it, which is around 1.5325. And let's say, we get a dip here on Wednesday and we come back up. And after Thursday, we're still below this 1.5325 after the event risks. Then I would say the market is respecting this top, and I would look for the market to come back down to around these lows, at least in the short term, 1.5050 down to 1.5026. So that would be the short-term play. But again, even after the ECB and BOE, we have GDP, U.S. GDP, and U.S. non-farm payroll on Friday, which can shake things up again, because tapering is going to be dependent on whether we get good economic data from the U.S. So advanced GDP for the second quarter and non-farm payroll will be good, good clues to whether tapering will take place end of this year or early next year, or whether it will be much later. So again, reserve any outlook outside of the intraday session, outside of the short-term sessions. Okay, that's the pound dollar. Here's the U.S. dollar yen, which is bearish at the moment. Okay. You see this congestion. The market was in consolidation and decided to be bearish heading into this week. Okay. Broke below the June speed line. First of all, it stayed below this trend line here. But, when you look at this chart, there's no direction. Any direction will have to be limited to the very short term. It looks like the market right now is consolidating as well, like many pairs, just consolidating ahead of Wednesday's FOMC. Okay. Now, if the dollar weakens after the FOMC event risk, I would anticipate the ability to come back down to these lows here, 93.77, at least 95.80 pivot down here. And I would, if after this Wednesday, the dollar is weakening, we still have Friday's event risks, but I would anticipate a good likelihood of the market falling back towards these lows here, the June lows. Okay, but if after Wednesday, and you get a little bit of dollar weakness, but it holds above, let's say, 61.8%, okay, or around these lows here. This is a pivot area here. You got some resistance, you got some support, and it's the 61.8%, around 96.75. Now, that's another area where you should monitor in case the market pops back up. Okay. So, how would you anticipate these in trading? How would you practically monitor these levels in case, your idea is wrong? Well, let's say you get in this market here I would, suggest within the upper end of this consolidation, around 98.50. Let's say you have a short position there, and the market does come down, okay, but it starts to struggle at 97, okay. What you could do is scale down your position to half the position, and if, in that scenario, even if the market comes back up, you could break even. If the market comes back up and hits your stop, you could break even. And if you move your stop to break even, if your runner hits the break even, your first half would still lock in some profit. So, this is one trade management technique. When you're in the trade, you have your target, but you have some intermediate levels that are pretty key. And without breaking those levels, your trade idea isn't completely valid yet. You can still lock in some profit, and still give it some elbow space to work its way down. Okay, so scaling out plus moving your stop closer, or moving your stop closer are strategies you can employ when there are these event risks and you have a trade working out in the beginning, but you don't want to stay in that risk environment without locking in some profit. Okay, so I think the dollar yen right now is worth selling on a rally, but it depends. If there's suddenly a candlestick that's engulfing all these candles, that would be a red light, and you should be cautious about fading that rally. But if we have these candles in normal volatility coming back up to the higher upper end of this consolidation, I would even use this pivot as guidance. Could come up to this pivot as well, back to this previous support that could be tested as resistance. All these factors I would use to short this pair from around 98.50, 98.70 area. Yeah, but again, we know we need to have quick trade management in front of the event risk. Okay. Okay, so quick question here. Do you find Asian session continues European sentiment? Not particularly. Sometimes, if it's an overwhelming ECB type of surprise, it could go through several sessions. But if it's, first of all, the Asian session is before the European session, so you have the U.S. session in the middle. So the Asian session is dealing with U.S. traders' reactions to the market and how the U.S. traders, set up the market. So I wouldn't use that statement there particularly for trading strategy. Okay. Okay, so moving on from the dollar yen to the euro yen. And as you see in the euro yen, just like in the dollar yen, we have cracked the June speed line. Okay. You have the RSI dip below 30. And in the dollar yen, you also saw the RSI dip below 30, stay mostly below 60 and come back below 30, which is a sign of bearish momentum developing. Okay? But when you look at the moving average here, which is flat, you know that the market doesn't really have any clear direction. Same thing in the euro yen. You know, in this 4-hour chart, the moving average is flat. You know that the market hasn't developed any, true direction lately. You know, since the end of May, you had this swing down, swing up, and half a swing down at the moment. So, no particular direction. But you do have the breaking of this speed line as a bearish indication, the RSI dipping below 30 as a bearish indication in the very short term, but it's still above the 200 moving average. So euro yen for me, I would like to trade it off of key support or key resistance, okay, instead of trying to ride this trend down right now, because it's a swing within a non-directional market. And in the non-directional market, I'd rather go for the extremes. When the RSI, if the RSI shows you a bullish divergence, for example, and prices, down here in this support area, and it's a pretty wide support area, so you have to be careful. You have to monitor the price action, and you might have to put a stop below if you're going to go for the long position here, which is where I would look for the long position. A test of this trend line that, have to go back a little bit, goes back to the April low here. Okay, so you have this speed line as well to monitor. Okay, along with these lows. And if you have a bullish divergence, that would be, for me, a sign to buy. But my target, I would have to revise my target there. Instead of up here, I would first anticipate my target to be around 131. Okay? Because again, this is a non-directional market. Just because we have support here doesn't mean the market will definitely make another high above this high. And to be more conservative, in case the market doesn't even make it to this high, in case the market starts to converge and consolidate with less volatility, then we should anticipate these highs here as a target, even down to this pivot here around 130.80. So 130.80 up to 131. We should start to scale out to lock in most of our profit at that point. Okay. All right. So that's the euro yen. Looking to catch this dip into key support area, because this is not a bearish market. If this was a bearish market, I would refrain from trying to catch this dip, this swing down. Okay, so that's the euro yen. We could also talk about the alternate side of this, which is a rally. Maybe it doesn't come down here, maybe it does, but let's say the market comes back up to this 133.80 level, and when we examine it in the daily chart, we see that that's the 2013 high. Now, when you look at that high, if the market pushes there, we are going at it with a bullish bias in the higher time frame. In the 4-hour time frame, it would still be some bullish bias because it would be above the 200 moving average here, and above these, these moving averages would probably get back into bullish alignment. So there's a slight bullish bias here, which, warns against trying to pick the top, so to say, up here at 133.80. And if you do, I would suggest smaller position. Okay, and you would probably have to put your stop above 134, like 134.36 or something like that, up here in case it needs some elbow space. And also, the bearish outlook would be limited because you had these higher lows, and then when you look at the daily chart, you also had higher lows going back. So you can't anticipate even a dip back to the previous low where it was. Okay, you would have to look at, let's say the market came down here and rallied like that. You would have to anticipate maybe a 50% retracement, something like that as a target instead of coming down to these lows here. Okay, so that's why, I think a third scenario would be the break above 133.80, which is a longer term play, okay, which will require, in my opinion, yen to weaken across the board as well, because the Japanese yen, which has been weak since second half of 2002 to 2012, that yen weakness has been stalled. Okay, you see the pound yen here, the yen weakness has stalled. You see the dollar yen here, yen weakness has stalled. So there has to be something that pushes the yen even lower for the euro yen to cross the 133.80, 134 area. But if that does happen, we have a major breakout. Okay, and we might have to go to the weekly chart to look at that breakout. It's a little messy here with these. I could clear that up just to give us a better look at a possible breakout. Oh, how do I delete this Fibonacci? There you go. Which would open up these highs here, 137.45 up to 139.44. These highs here from the 2009 highs, basically. Okay. Now, we have presented a few scenarios. Buy here, sell here, buy a break above, and we also have to talk about the possibility of a break below, right? For me, a break below, also is a very key indication that yen weakness needs more correction. Okay? So in that scenario, first of all, in the short term, a break below this rising speed line, below this pivot here, opens up this pivot down here at around 125. And if you look at the daily chart, that's a key level close to the 200-day moving average. And a break below that gives you a little double top action here and opens up these lows here. And so that's pretty simple. You see a market in consolidation. You could either play the consolidation boundaries, or if it breaks above or below, look for some extension in that direction. And it's going to be similar in the pound yen, which has a little more bearish bias than the euro yen. The euro is actually looks pretty resilient this week, but the pound has been sliding, right? Here the pound yen was in this rising channel since June, the June low here, 147.09. And this speed line just broke today. You see price action dip below the 200 moving average, which has been flat, so it reflects more sideways market. And now we're just, this opens up the 148.76, and below that, the 147.09 level. Okay. And only a return above 151, especially today, would signal further bullish bias. Right now, we have turned from slightly bullish to neutral to slightly bearish. Okay. And, maybe at the moment, at this break, it's a little too early to sell, or, in that, the RSI here in the 4-hour chart is dipping below 30, so we might have to see a little bit of correction, and if we do get a correction, we can make sure to put a stop above 151 in anticipation of some extension towards this pivot at 148.76 with a more aggressive target down to 147.09. Okay. If you look at the higher time frame in the daily chart, you see that these levels down here, that's the 200-day moving average, and it's really this consolidation support area. So when the market gets there, again, that could be an alternate trade idea. If your 4-hour chart, for example, shows you oversold condition, if the market starts to trade sideways in the 15-minute chart, 1-hour chart, and then breaks to the upside, that's a sign that the market respects these lows. And in that scenario, I would look for the market to come back into the middle of this consolidation around 151. And again, a break above 151 will be needed to bring in the upper part of this consolidation zone in focus. I like this scenario better just because it's going along with the trend that started in 2012. Okay. A true top for me will be a break below this 200 moving average and these lows here. Okay, which means you break like that. And in that scenario, I would be aggressively fading any rallies. Okay, back into at least the 137.80 to 138 area. Okay, so we have that break scenario. And of course, if it breaks to the upside, we have bullish continuation. Our next resistance pivot appears to be around 163. Okay, yeah. Just below 163, maybe between 162 and 163. So above 156.80, we open up the 162 to 163 area. Okay. All right. So that's the pound yen. At this point, I would like to, let you guys tell me what charts you guys want to look at, what pairs you guys want to look at. I could take a look at Euro Pound, which is in an awesome breakout. At FX Times, we looked at this yesterday. We looked at this rounded bottom, okay, in this 1-hour chart. We looked at the RSI holding the bullish bias after breaking above 70. It was able to hold mostly above 40. There was a couple of spikes here and then here, but mainly it maintained the bullish momentum, especially when it was able to push above 60. Okay, so now, this is in a bullish continuation, about to come back up to these highs here at 87.09. And the Euro Pound also reflects the fact that the Euro has been resilient, but the Pound has been very weak. Okay, and so let's move. Okay, so let's go to gold and silver maybe quickly. Okay, so gold, after a very sharp slide, as you can see in the daily chart since 2012, it came down and found a low so far for 2013 at 118.15, and the market sort of had this corrective rally, sort of squared up this market, meaning it's in consolidation now. But if it's bearish, this is a good place to continue the bearish trend, especially if this rising speed line breaks. Okay. If the market comes back down below 1300 and breaks this rising speed line, I would look for the market to come back down to retest these lows. Okay, but at the moment, it's still consolidating. And at the moment, in the short term, we do have some bullish momentum, especially if the market is above 1300. Okay. Last week, I was anticipating this market to come back down to around 1300, to around this, the speed line. Oh, which is a little, okay, there we go. Around the speed line here. It hasn't been able to do that. In fact, it's been in more of a congestion pattern, close to like a triangle. But a break from the triangle can often be a fake out. So we need to look at the triangle as more of a range between 1346.50 and 1308 roughly. Okay. Yeah, I think there's still an opportunity to buy here, but of course the FOMC event risk can shake things up. Okay, but before the event risk, I think this is an okay level to get into for a bullish continuation with a target up to these highs here between 1338 and 1347. Okay. Then if it breaks, I would say that's that would be a lucky scenario. Okay, because you don't know if this consolidation is going to break to the upside, but you do have a bit of a bias here, the bullish bias. The RSI here is bullish. Tag 70 stayed above 40, tag 70 still staying above 40. So you do have some bullish bias, but that doesn't always extend into the future beyond your initial move. But But that's where the trade management comes in. You could scale out, lock in some profit, and let part of your trade have a chance to continue higher. Okay, so, I never trade. I mean, you do want to make some soft predictions and anticipations, but I never depend on those. There's always got to be some type of some agility, I would say, in changing scenarios and scenarios changing your plan. So you have to, that's where the discretionary, quote unquote, discretionary trading comes in. But for me, discretionary trading is really discretionary trade management. Okay. Because, you can't say that it's definitely going to resist. So you want to have, you want the best of both worlds, sort of. Lock in some profit, but let the second, let some of your positions still have a chance to go up. Because at that point, your risk profile is break even or maybe minimum profit in the worst case scenario, and in the best case scenario, you have additional profit. It might not be the maximum profit you could get from this swing, but in the long run, when it's sort of casting a net over different scenarios that can happen. And I believe in the long run, if you have good trade management, even if you don't maximize every single trade, in the long run, you will have a better performance. Okay. Here's silver, which I've been looking at in this congestion, and it's breaking to the downside. Not a very strong break, but still it does take away some of that bullish bias. I'm still not completely convinced of this break. We do have a little bit of a bullish divergence here. It's not oversold. In fact, if there's a bullish divergence around 40 and the RSI stays above 40, it actually keeps a bit of that bullish momentum. Okay, so I'm not convinced yet that this is a true break to the downside. The market's still very choppy here, and it looks like there's still some choppiness back to the upside, and there's a chance that the market comes back in here. But as far as how we should trade this, You know, if there's some bearish bias, I would rather sell it when the market comes back up to this 20.20 area, which is a previous resistance pivot. We would also test this falling speed line. This would give us a better edge as far as putting our risk above, our stop above that. It'll be closer to our stop, so we don't have to risk this whole chunk here. If we get an entry up here around 2020, with a target first down to 19.25, but with a more aggressive target down to these lows as well. To me, that would be a valid bearish attempt based on the fact that it has been bearish and our consolidation appears to have found some resistance up here. I want to sell from resistance, or at least the lower part of resistance. The higher part of this resistance is, of course, up here. Okay, so maybe you might even have to put your stop above that. Okay, so you want to make sure you have a good reward to risk, because up here you see, let's say this is how much you risk, this is how much potential reward, and in this case it's probably 1-to-1. Okay, but that's the conservative target, of course. You have your potential targets up here, and you have the edge in that the market has been bearish. Okay, so I know analysts, they'll talk about 3-to-1, 4-to-1, but the higher reward to risk sometimes means the lower edge you have. I could just draw a line like this into below these lows and say that that's a 5-to-1 reward to risk. But the chance of this developing versus the chance of this developing is going to be lower. So again, it's not about even if I do have this anticipation, this is a possibility. I'm not going to hold my position the whole time and risk the market coming down and then coming back up here to hit my stop. Again, trade management is important when you plan on these trades and you have intermediate levels where your trade might go wrong. Like at these support levels, you might start locking it in, scaling out your position size. Okay, so let's take a look at the Aussie Yen. Very interesting because here we had, before today, I should say before this week and part of last week, this market looks like it was ready to, round out a bottom. But in this 4-hour chart, you have many clues that suggested it's not time yet. Suggested that the momentum is still bearish. For example, the RSI held mostly below 60. There were some spikes, but it mainly held below 60 and was able to tag 30. So that's that's bearish momentum. Staying below the 200 moving average. These smaller moving averages converged, but but now the market broke to the downside, and they look like they're going to get back into the bearish alignment. Okay. In this scenario, I've been suggesting, okay, you see a consolidation. Okay, so the market is neutral, but there is a bearish trend before that, so the market is bearish to neutral or neutral to bearish, whichever way you want to look at it. I would say it's bearish to neutral, turn from bearish to neutral. Now, in a neutral market, you look at highs and lows as a place to sell or buy. In a sideways market with a bearish bias, you have more preference to sell from the resistance than to buy from the support, right? There's more edge to the downside. You're following the trend. The trend is your friend. So that's one way, to practically apply the concept, the trend is your friend, is that when the market goes sideways after a trend, we can look for the top of that, in this bearish trend, we can look for the top of that consolidation to sell from. Okay? Buying from support will be a little more tricky, and I would say, nothing is going to be completely invalid. You could possibly look for some support here. If there's a bullish divergence here, you see the market trade sideways and then pop up from this 0.90 area. We could anticipate the market coming back to the middle. Okay, with a less likelihood that it comes back up here, but it's still a chance that it could. But I would say that the first target where you want to have at least 1-to-1 reward, preferably 2-to-1 reward to risk ratio, is back to the 90-150 area, 0.90-150. So from 0.90, maybe even from 0.90, 30 something, because you want to see the market actually establish at least some near-term bottom before considering this counter trend trade. Okay. On the other hand, if you see a break below 0.90, 89.97, 0.90, okay, and then you do see this kind of pullback, I would look for the middle to be key. Okay, so if this swing here comes down all the way down here, breaks below 0.89, 90, and comes back up towards this area, I would consider shorting. Okay, at that point, I might not wait until 0.93 because the structure will look more bearish now. And waiting for 0.93, you'll likely, in my opinion, miss any bearish continuation. Okay. Where is the next target? Okay, to the downside, you will have to go to the weekly chart. So let me just clear some of these lines here. You go to the weekly chart. I would say the 0.8770 pivot here could be our next target. Okay. So that's the Aussie dollar. Okay. So pan on fire, yes, there's a couple of scenarios, right? One is you play these lows here, but I would be very conservative in terms of position size, as well as your trade management. From down here, if the market comes up and it starts to struggle to break above 91, lock it in. It's too risky. In fact, like I said, the preferred scenario actually is the bearish continuation. So you have a break to the downside, come back up, and sell around this middle area. Now, if it doesn't break and it comes back up, I don't think I want to sell from that middle area because I would rather wait again until up here. Because if it doesn't break this low, the market's still consolidating, still sideways. We're not opening up more bearish bias just yet. Okay, so if it doesn't break, I would wait for a higher price to sell instead. All right. Okay, so in the last 10 minutes, I would like to open it up to you guys for any other charts you want to look at. For any questions you have in terms of trade management, I know I might want to go back to the euro dollar just because I know this is what a lot of you look at. A lot of the market looks at the euro dollar. So just to rewind again, looking for this breakout and retracement to either buy from or sell from. Okay, but in this event risk environment, lock it in. Lock it in, scale out your position if there are reactions in the market that doesn't look good, especially you know, like you have this bearish break, and the market refuses to break below this pivot area. You see, it was these lows here match up with these highs here. And if it doesn't break below, hey, there's a risk that it could continue higher. And at that point, you want to lock it in. Okay. Can we go for gold? I'm not sure what you mean, but okay, we could review again what I think, the different scenarios we should anticipate in gold. You see, I know, like, I'm not giving you guys predictions, buy or sell. I just want, I think it's more important that you have all these different scenarios. That you're able to juggle all these different scenarios, because then it gives you the preparation to trade them, to make the trade plans for these different scenarios. You don't want to be caught in a situation where you're in one scenario and then, the market gives you a good signal, but you weren't prepared for it because you were so focused on only the buy on the dip scenario. Okay, that can happen a lot. You're looking for this, and you might even have been in a failed trade attempt. But even if after let's say, let's just say the market, you buy here, and maybe in the beginning you get a little bounce, but you weren't able to lock it in, and the market then breaks down like this. Okay, at that point, you might have incurred a loss, but if you're prepared for the scenario of the breakdown, you would be ready to short again instead of, moping about this failed attempt. Okay, so it's very important when you do have losses, dealing with losses so that you're in position to get into another trade is very important in the long run. Can I sell the euro now? I'm gonna go into the 1 hour chart because I don't think this is a good break to the downside. If it was a good break to the downside, it needs to clear this rising speed line. We don't like a tail like this that closes still above the previous low. If you have, this is the 1 hour chart. You at least want the 1 hour chart candle to come down to signal a break to the downside. The RSI should also break below 40. We have broken below 40 without any extension lower, and this isn't even below 40, so it's still consolidating momentum with a bullish bias because it had tag 70. So, for me, I would rather wait until higher levels up here to sell it. That would have worked earlier today. You look at all these resistance levels, but I would admit that at this point, it was a very, very short, very small position, just because you see the market has been bullish, and shorting at this position, for me, lock it in at 1.3270. Okay. So this is one of those very short-term, near-term intraday trades that, I definitely would not have caught the whole thing. Most likely, the best that I would have able to do is come back down here, scale out half a position, let the other half come down here at most. And then when you see a reaction like this, you want to put a stop above 1.3270 so that, you lock in a little bit more of your runner as well. Okay? So you lock it in by scaling out your first half of your position so you get a little dip here. And then the runner, when it comes down and bounces back up, if you move your stop closer, it could also be locked in, like 10, 15 pips. Okay. what is your entry criteria for any setup? Well, that's a very general question. Any setup. Well, I look for my favorite setups are setups like this. Are setups that are, where the market is trading sideways. I don't like overwhelming number of event risks though. If it was just one event risk this week, singular event risk, that would be okay. A break from a singular event risk, I'm not too worried about a follow-up event risk. But this week, it's the break, playing the break of this consolidation. I have to be more careful playing the break of this consolidation. Okay, and the criteria of the break, like I said before, the candle has to close below the key level, and there are two key levels here. This flat support pivot and this projected rising support needs to break. Okay, that's the main criteria. There are accompanying criteria that would help, like a break of the RSI below 40. Okay, and preferably the RSI comes down below 30 before you get this pullback. Okay. In that scenario, I would see an established bearish momentum. You see, the RSI has not been able to tag 30 for a while, right? Back here, when the market was bearish, it was tagging 30, staying mostly below 60. Not always. You had some break here, but you see the main pattern here was that it was able to break below 30. So, conventional assessment of this RSI is that when it's below 30, it's oversold. Yeah, maybe in the near term, the market needs to resolve this oversold condition. But you see that in the bigger picture, the ability to tag 30 is a trend following type of signal, a trend developing signal. So here, if the RSI is able to dip below 30, that gives me more confidence to short after a rally. Okay, and when I say more confidence, I just mean position size can be bigger. I recommend all eventually developing a system where you have a trade that you're not as confident, but there are some setups there that are valid. Okay. And then there's a medium confidence and a very confident trade. You have, 2 to 3 levels of confidence for your trades. And that could help you manage uncertainty. It helps you make a trade without analysis paralysis. Okay, so we're going to wrap up. Just going to say, do you look for any candle pattern like pin bar and reversal setups? That helps, but I'm not dependent on them. But reversal candles do help enter the trade with more confidence. Okay. All right, so that's it for today. Thank you guys for your attention, and hope you guys enjoy the webinar and stay for further FX Street webinars. I will be back here next month, but if you want to catch up with me, you can always go to www.fxtimes.com. That is my website. Or look for me in Skype, fan.yang.cmt. All right? So trade well, trade safe, and have a great week, guys. Bye-bye.